Imagine for a second, $10 million in your bank account. You've worked hard for decades, saved, invested, and now you're finally at the point where you have this huge sum of money in front of you. The dream is real. You've made it. You could be done working and live comfortably for the rest of your life. Or could you? The question we're tackling today might be more shocking than you think. How much retirement income can you really generate from $10 million? It's one thing to have that number in your account, but it's a whole different reality to make it last, grow, and provide a steady income without running out. In this video, we're going to break down the truth about how $10 million actually plays out when it comes to generating retirement income. There are some things you might not have considered, and trust us, the numbers might surprise you. Number 1. The big question. Can $10 million really sustain your retirement? Let's start with the first and most important question. How much will $10 million actually provide an income when you're retired? Is it enough to live on for the rest of your life, or will you be living with constant financial worry? The truth is, it depends on how you manage it. Most financial experts will tell you that a safe withdrawal rate from your retirement savings is around 4% per year. This rule is based on research showing that if you withdraw no more than 4% of your portfolio annually, you'll likely have enough to last for 30 years or even longer without running out of money. Let's do the math. $10 million times 4% equals $400,000 per year. That's about $33,333 per month. Sounds pretty good, right? But keep in mind that not all of that is going to be yours to keep. Taxes, inflation, and lifestyle choices will eat away at this amount, and you'll need to plan for unexpected expenses. Number 2, the $400,000 annual income. Is it enough? $400,000 per year is a substantial amount of money, but let's dive deeper. What kind of lifestyle does that afford you? Housing. If you live in a high-cost area, such as New York, San Francisco, or London, housing alone could take up a large chunk of your income. A luxurious home or penthouse apartment could cost upwards of $10,000 to $20,000 a month or more. Travel and leisure. Many people dream of traveling the world during their retirement. While $400,000 annually could certainly fund an extravagant travel lifestyle, frequent trips to exotic destinations, staying in luxury resorts, and dining at high-end restaurants will quickly add up. Healthcare. As you get older, healthcare costs can increase substantially. Even with good health insurance, out-of-pocket expenses can be significant. Long-term care or unexpected medical emergencies could cause your costs to rise unexpectedly. In short, $400,000 per year can go much faster than you think. While it's a comfortable income, it may not stretch as far as you imagine if you're accustomed to a luxurious lifestyle. 3. Risk of inflation, the silent income eater. One of the biggest risks to retirement income is inflation. Over time, the cost of goods and services increases, and your purchasing power decreases. Let's say you have $10 million now, and you start withdrawing 4% a year. But what happens in 20 or 30 years? If inflation averages 3% per year, that means the cost of living will more than double in 25 years. A $5,000 vacation today could cost $10,000 in the future. Healthcare costs, food, and housing will all be more expensive even if your income remains the same. $400,000 today will not be $400,000 in 20 years. With inflation, that income will lose its purchasing power. And you might find that your $10 million doesn't stretch nearly as far. To combat inflation, it's essential to invest wisely and aim for returns that outpace inflation. But remember, higher returns often come with higher risks, and the balance between growth and risk is a delicate one in retirement. 4. Understanding investment strategies. How to make $10 million work for you. Having $10 million is a great start, but how you invest it will determine your retirement income. Let's take a look at some of the most common investment strategies for retirees and how they can affect your income. A. Dividend stocks. One of the most popular strategies is investing in dividend-paying stocks. These stocks give you regular payouts, often quarterly, as a share of the company's profits.
With $10 million, you could invest in high-dividend stocks to generate a steady stream of income. Let's say you invest in dividend stocks with an average yield of 3%. $10 million times 3% equals $300,000 per year from dividends. While this is slightly less than the 4% withdrawal rule, it comes with the benefit of not touching your principal and potentially earning returns that keep pace with inflation. However, the downside is market volatility, where stock prices can fluctuate, potentially reducing your income during market downturns. B. Bonds and fixed income. Another popular strategy is investing in bonds, which are essentially loans you give to the government or corporations in exchange for regular interest payments. Bonds tend to be safer than stocks, but they also offer lower returns. If you invest in bonds with an average yield of 2%, you'd earn about $200,000 annually. On your $10 million investment, if you purchased rental properties for $10 million, you could potentially earn a 5 to 6% return from rents. That could mean about $500,000 to $600,000 per year in income, with the added bonus of building equity in physical properties. However, real estate requires ongoing management, and there are risks such as vacancies, property damage, and changes in the housing market. D. Alternative investments. Some retirees seek out alternative investments, such as private equity, hedge funds, or even cryptocurrencies. These can offer higher returns, but are typically more complex and carry higher risks. If you allocate a portion of your $10 million to alternative investments, you might be able to earn higher returns, but remember, the risks can be substantial. 5. Taxes, the hidden retirement killer. When it comes to your $10 million retirement income, don't forget about taxes. While $400,000 per year sounds fantastic, taxes will reduce your income significantly. In the U.S., the top tax bracket for individuals is 37%, so you could be losing over $148,000 of that $400,000 just to taxes. Additionally, capital gains taxes, dividend taxes, and other types of tax can eat into your income. Tax planning is crucial to ensuring you keep as much of your retirement income as possible. 6. What happens if $10 million isn't enough? Let's face it, the truth is that $10 million may not be enough for everyone. Some people have bigger dreams, higher medical costs, or an expensive lifestyle that simply isn't sustainable on $10 million. You may also face unexpected events, such as emergencies, natural disasters, health emergencies, or other unforeseen expenses can quickly deplete your funds. Family. Supporting children, grandchildren, or extended family members can add an unpredictable financial burden. In such cases, you may need to consider working longer, downsizing your lifestyle, or finding alternative ways to generate income, such as starting a business or investing in high-risk, high-reward opportunities.